the real pain, the generational wealth
Mm-hmm.
is coming in B and C class buildings because fools overpaid by a lot. I want to talk about a housing or real estate depression. I want to talk about a couple of videos that came out recently called the 2025 Bloodbath, where we talk about either residential or multifamily. And to have this conversation with the one and only Brian Adamson, I'm going to read a comment from Hal Compton. Hal Compton said this: "If there is one thing Mike has taught me, it is that things regress to the mean, except for single family homes. That asset class cannot go down in value no matter what." I certainly have my thoughts about this clown called Hal, but I'll let you respond first. That asset class cannot go down in value no matter what. Apparently, I taught him that. I don't know. I don't know how you deal with these folks on the internet, but what do you think?
I haven't seen that video yet. I mean, I've seen a lot of them, but I haven't seen that one yet. So if you could send it to me, that'd be helpful. Uh, it's a very interesting thing that's going on. Now, you more the statistician, as I will call it, right? You drill into the data like nobody's business. Um, I'm more of a feel guy, right? Not that I don't look at the data, I just don't study it like you do, right? And so when I say that, I mean I'm in I'm in a lot of different circles. I'm in a lot of different environments. I'm in a lot of different marketplaces. And I get a sense that we are in a recession still. And while it may not talked about, or maybe I'm just not reading the articles where it is talked about, I don't believe that it's been um, talked about as prevalent as it was maybe 18 months, 24 months ago. And the sense and the feeling that I get from the marketplace is that people are hurting right now.
Yeah.
And while I still believe that there's an inventory issue, I still believe for those reasons that it won't be a market contraction. I do believe, though, that based on where rates are or go and the general affordability for the buyer, that prices will have to adjust if homes will sell. That I do believe.
Yeah. So when we talk about it, let's try to put so let me give my thoughts, right? Because I get this comment from Hal is clearly a hater. He's
Mm-hmm.
clearly a crash bro.
Mm-hmm.
Again, I'll read it so I can respond. "If there's one thing that Mike has taught me, it is that things regress to the mean, except for single family housing. That asset class cannot go down in value no matter what." Well, Hal, of course it could go down. In fact, Hal, if you know my story, I called it. In '06, I said single family homes are overpriced and I sold all of my houses. So not only did I call it, I took action. I was right and moved into an asset class that benefited. Now, just because you're a hater and the fact that I said that housing transactions would fall and prices wouldn't, I was right and your false prophets were wrong, doesn't give you cause to say stupid shit. Of course, single family could go down. If
Mm-hmm.
we have a nasty recession, unemployment doubles, we're in it like 1981 for a couple of years. Of course it can. But, you know, I get comments like that from Crash Bro fans all the time that are just like completely clueless.
Yeah.
Let me say this, dude, I'll ask you this. I'll say this and you can respond.
Okay.
Brian, I wish, I pray home prices would fall 50%.
Yeah, that'd be nice. Yeah. Yeah, that'd be nice. You know, one of my mentors says that some of the hardest work that people never do is think.
Yeah.
Those comments, right, are synonymous with that. It's just easier for somebody to spew off kind of like uh baseless comments, essentially, right? Just to take a poke at somebody that actually is doing the work and trying to provide something of substance to people on a day in and day out basis. It's easier for these clowns just to, do drive-bys. And
Yeah.
so, you got to be careful not even to give them too much attention or even a platform, right? Because that's what they're searching for.
Yeah, it's really funny. I wish these clowns, I wish they would hold their false prophets. I mean, think about these folks. You and I know them. They've got big ass channels. They're preaching
Mhm.
fear for 5 years. They've
Mhm.
been wrong nearly every month, every week, every day, but nobody holds them accountable. You know
Yeah.
how many people they hurt by saying don't buy in 2020? Don't buy in 2021? I mean, millions of people, millions of dollars, millions of net worth. They're disposal. I mean, think about it. 2022, second best year in 50 years to buy a home based on affordability. These
Mhm.
clowns say don't buy. You know who's doing well today? People who have fixed rate debt on a 30-year mortgage sub 3%. Their mortgage payments are going up a little bit by taxes and insurance, but it ain't gone up 30% like rent.
For sure.
You can't save now because rent is so high.
For sure. For sure.
So yeah, these comments from folks like Hal just don't get it.
Yeah.
Yes, single family homes can go down. Yes, I've called it. Yes, I've sold. Yes, it can happen. But right now, today, we've got inventory 30% of normal.
Yeah.
We have transactions down 50%.
Mhm.
The recipe for a housing crash is simple. Supply explodes, demand falls off.
Yeah.
Tell me when supply is going to quadruple or quintuple and when demand is going to roll off, and I'll call a crash. We're just not there.
Yeah. Yeah. No, we're not. But I will say, I believe just based off of all the bad debt coming due and has been over the last 18 months in the commercial multifamily sector, there's going to be a ton of opportunity there. I mean, it's already happening. Uh, you know,
Yes.
and
Yes.
and on the single family side, I don't think it's going to be a nationwide thing, but I do believe that we're going to see some drastic
Oh
change
yeah.
in specific marketplaces. And
A
because
thousand
again,
percent on
yeah,
both.
okay, okay. So we aligned on that piece.
Yeah, it's funny. I did two videos, one with a guest and one by myself, just a live stream talking about, Bloodbath 2025.
Hmm.
I don't see it single family nationwide.
Hmm.
Could it happen in a state, a city, a buy box? Absolutely. Like there are going to be some buy boxes. Like if your buy box is Palm Springs, good luck.
Yeah,
If your buy box is like Southeast Florida, good luck.
for sure.
Right. But if you're talking national, it doesn't move that fast. It's
Yeah,
not coming.
yeah.
However, you want to talk multifamily? I will go on record once again saying what is coming in C and B class multifamily will dwarf the pain felt in single family in '08. The pain is going to be epic, and it hasn't even started yet.
I don't know if I agree with that. I mean, I do in this sense. I agree in the sense of the impact, right? That it will be synonymous with '08.
Mhm,
But here's why I differ.
mhm.
On the commercial multifamily side, those are investors and operators that's being crushed. The totality of what happened back in '08 was affecting the actual homeowners.
Yeah, no, I'm not talking people. I'm
Oh,
talking
okay.
money,
Got it, got it, got
dollars.
it, got it, got it. Okay, okay.
Yeah.
Well, thanks for
Well,
clarifying. So yeah,
here
money wise, it will dwarf it. I agree with
oh,
you 100%.
and here's the deal. I
100%.
mean, people don't get it. It was certainly more people were hurt last time, no doubt. A lot
Hmm.
more single families than multifamily. But here's the truth. They lost very little equity. A lot of those loans were 97%, 101% loans. So the bank took the losses. The
Hmm.
person lost the home, yes, but the equity, not a lot was lost. Today, dude, these multifamily loans, best case, most aggressive was 25% down, a lot of 30% down. And a lot of these deals are going to be sold at 50 cents on the dollar. So that equity is completely gone. So let me be clear. The pain that's coming is going to be at the equity. There will be more equity and real dollars lost by people this time than last time. That's
For
where it's
sure.
coming.
For sure. For sure. Yeah, I mean, what was that deal in Texas a couple weeks ago? 131 million. The note recently sold for like 12.1 or something crazy
Yeah,
like that.
so, yeah, like 90%
That's,
off. Yeah.
I mean, in less than 3 years, Mike, that's unbelievable.
Yeah, that's burning like 25 million bucks a year. That's
Yes,
crazy.
yes, yes. So yeah, I think I think these next 12 to 18 months is going to be extremely interesting. And I do think, unlike single family, we're going to see this more widespread throughout the country. I don't
Oh
think that
yeah.
this
Yeah.
is, a here and there thing. I think it's going to impact the entire landscape of commercial multifamily as we know it, as well as office and
Yeah.
some retail as well.
Yeah. So we're seeing class A already retrade, but the pain's coming to class B and class C. So Brian, I did this math yesterday in
Hmm.
my live stream. I want to do it with you. And this is very much my buy box, but to your point, this happened everywhere.
Yeah.
So let's just say I had an apartment building, which I had, that had an NOI of 100 grand, just for easy math.
Hmm.
In my market, a C class building traded for about an 8 cap.
Hmm.
So it would be worth, roughly speak, or would be worth exactly $1.25 million. Okay.
Okay.
I sold a building like that at a 7.5 cap. So I got a little bit more than that. That building ultimately got down to a 5 cap. So no, that can't be right. Hold on. I got too many zeros. So 100,000 divided by 0.05. So that building went from 1.25 to $2 million
Hmm.
simply with cap rate compression,
For sure.
right? So
Yeah.
guess what happens? You go get IO debt, you go get this, you go get that, you get this, that, the other. And what's happening in my market is that 5 cap should have never, ever, I've been in the market 20 years.
Yeah.
It should have never been a 5 cap. Money
Absolutely.
was free, so it got a 5 cap. Dude, that thing is going to trade at like a 9 cap because you do regress to the mean, you go to the other side. It's going to be worth 1.1. But here's the problem. That $2 million building, you put 500K down, you got a $1.5 million loan.
Yeah.
You come up for your 3 year IO whatever reset. Dude, you're going to have to write like a $700,000 check called a cash in refi to
Yeah.
keep the building.
Yeah.
All of these buildings are going back to the bank. It is going to be a bloodbath of on bloodbath.
For sure. For sure. Yeah, I've been seeing that. So I don't invest here in Orlando in multifamily. All of mine is in the Midwest in Detroit. But I saw C-class buildings that were selling as low as 4.5, 5 caps,
Oh,
which is insane to me, Mike. I mean,
insane.
that's not sustainable,
Oh,
And so when these cap rates inflate again, as they're doing right now, and the more that things sell at a discount, they're just going to continue to inflate more and more, So the most desperate seller is going to continue to set the new market in terms of where the cap rate is going to be reestablished. And you're right. I mean, hundreds of thousands, millions of dollars lost, and you can't recover from that because it's real numbers. You know what I mean? It's real cash in that has to
yes.
happen to settle this debt. And for that reason, um, yeah, I mean, if you got dry powder on the sidelines right now, you will be able to take extreme advantage of the opportunities that are coming forward for sure.
Yeah. The next couple of years are going to, again, we've already seen, like Ken McElroy talks about, Class A is starting to retrade. That's not where the pain is. There
Yeah.
are some big losses there. The real pain, the generational wealth
Hmm.
is coming in B and C class buildings because fools overpaid by a lot.
A whole lot.
And that has to get undone.
Yeah.
So at the end of the day, single family can come down, Hal, you hater, but we're not set up for that today. The real pain is coming to B and C class multifamily. Ryan, closing thoughts?
I do have a quick question for you.
Mhm.
Where's CPI right now? Because I'm still concerned about what's going on with the consumer.
Oh,
Uh,
yeah. I think the consumer's in trouble. To
okay.
your point, I think what we're seeing is it's always hard to say the average. So, yeah, the average consumer is in trouble.
Yeah.
They're pulling back,
Yeah.
and the consumer drives the economy. It can lead and will lead to a recession.
Okay.
Um, so your opening statement, I don't disagree with. I do think it is becoming unaffordable,
Mm.
and I think the wealth gap's becoming a real even bigger problem as the years tick by.
Yeah.
Um, yeah. So
I think because credit card debt is over 84% now. Is that kind of the number?
I don't know what 84% is. We do have record levels of credit card debt, something over $1 trillion. I think the
Okay.
average interest rate is in the 20s, which is stupid. Folks, pay off your credit cards. That's a 20% return on your money right there. Pay off your credit cards.
That's insane, Mike.
It is. It's bad. Yeah.
And
Yeah.
the average car note is $700 now.
Oh, I saw an even scarier number. I mean, I don't know if this is true, but I heard a lot of new car loans are over $1,000. That's insane.
That's nuts, man. That's nuts. I know my daughter had to get a car not long ago, and they were telling her the average interest rates were 11%. With 800 credit, you get about a 6% rate on the car on a
Yeah.
interest rate for a car note. So I mean, when you just look at all of that, right, and the teamings of it all, and again, like I said, I know you look at the data far more closely than I do, but I'm just getting a sense of
Oh, it's
the
bad.
teamings of it all, that these walls are going to start closing in, and probably for some a lot more aggressive than others. Will around election, they put a band-aid on things as they always do, probably. But the reality is,
It's coming.
I think quarter 1 is going to be brutal, bro. I really do.
Yeah, I have a lot. I have a lot more feeling that 2025 is not going to be a very good year for lots of reasons.
Yeah,
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 yeah.
yeah.
All righty, folks, do the work, do the work, do the work. Again, understand where you are, get your money right. Don't be scared. I know a lot of people produce fear. You got to control your environment. Nobody's coming here to save you.
Yeah.
Get in the right rooms, network the right people. Realize where there's great pain, there's great opportunity.
100%.
Brian, where can people find you?
Yeah, to echo that sentiment, I was just about to say this conversation wasn't to discourage anybody. When we're talking about contractions happening and corrections happening, we're talking about opportunity happening. So for everybody watching this, be encouraged, go out and start learning. Now is the time to start, developing your buy box, learning how to underwrite deals. If y'all didn't understand much of what Mike and I talked about with cap rates compressing and inflate, like learn all of this, understand what all that means, so that you can go out and take advantage of these opportunities when they come. Like start building your team, lining up investors. Like now is the time to start investing in your development so that you're ready for the opportunity when it comes. So anyway, you can find me at Brian Adamson Official, YouTube, Instagram, and everywhere else.
You're amazing, man. Thank you.
Thank you, man.